Hello guys, welcome all. I'm your host, CPA Deko Mohammed. So as I promised, I want to do a VAT, accounting for VAT. I want to tackle this brief question. Then the next VAT question is going to be complex. We're going to introduce what we call uh, deductible input tax. But for now, let's start with this simple illustration for this session. So I've been told the following transaction relates to Bamda Traders December 2023. We have sales mobile phone to Ali Traders, 600,000. Purchase goods on credit worth 150,000. Issued credit notes from Ali Traders, 100,000. We paid electricity, 70,000. Purchase fixed X, 50,000. Settle rent, 60,000. Sales to Uganda, 300,000. Purchase from local market, 80,000. Sales to local market, 300,000 inclusive of VAT. Then we're told assume that transaction are exclusive of 16% VAT unless otherwise stated. Required VAT payable or refundable. So this question is December 2023. Whenever you are given the question on VAT, you need to be keen on the month. Like for this case, December 2023, and this is going to use the new Finance Act 2023, which we remember we only have two rates: the 16% and 0%. So if I start with the first one, we have sales to mobile phones, early traders. So that is normal sales. Mobile phones are vatable, they are not exempt, and they're not generated. So this one is going to be 16%. So we have 16%. Purchase goods on credit worth 150,000. This is also going to attract 16%. Issued credit notes from early traders, still 16%. Remember, a credit note is going to reduce our sales. So whenever you issue a credit note, it's going to reduce your credit sale. If we will have received, it will have affect our input tax, but this one is going to affect our output tax because we are the one who issued. Paid electricity, this is going to be 16%. Purchase fixed X, this is exempt. So this is not vatable, it is exempt. Fixed X are exempt. Rent 60,000, this is 16%. Uganda, this is export. We have sell to Uganda. This export, all export are zero rated. All export are zero rated. Then we have purchase from local market, 80,000. This is going to affect the 16%. Sales to local market, inclusive of VAT. So for this question, we can go with two options. The first option is to go with the 16% over 116 multiplied by 300,000. This one is going to give us, since the transaction is gross, this one is going to give us the VAT amount. But the other option could have been, the other option is you take the rate or the other option could have been you first get the net amount. For you to get the net amount, before that, if I do this question, if I get the VAT, if I take 16 of 116 times 300,000, this is going to give me 41,379. 41,379. But now there's another option of doing this by getting the net amount. How do you get the net amount? How do you get it? We take the rate, we take 100 over the rate plus 16%, which is 116. 100 of 116. Then this we multiply this with the amount, which is 300,000. So this is going to give us the net amount, which is going to be how much? 100 divided by 116 times 300,000. So the net amount is 258, 621. Then if you get VAT, now VAT is equal to 16%, 16%, multiply that with 251, 258, 258, 621, 258, 621. And this is going to give us, I hope so, the same answer, times 0.16. Yes, 41,379, 41,379. So you can go with two options whenever the amount is in gross. Like this question, we have been told inclusive of VAT. That means the amount is in gross. So once the amount is in gross, you have two options. You first convert to net amount, which I go with that options. First by taking 100 over 116 divided by 100 over 116 times the amount, then just take times 16%. But you can also take the 16 over 116 times 300, it's going to give you the same amount. Remember why I'm saying that we will go with this net amount, because there are sometimes you ask about the deductible input tax, and those deductible input tax, the amount is in gross. So we need to go with this, sorry, the amount is in net amount. So we need to go with this option of converting that gross to net by taking 100 over 116. Lastly, I've been told assume transactions are exclusive of VAT unless otherwise stated. Required VAT payable or refundable. So this is the theme that I prepared. First is I'll start with the heading, the bumper traders. Then we have VAT for the month of December 2023. So let's start with the output. Remember, this is debit and credit. The output is on the credit side. The input is on the debit side. And remember, VAT, if you are to get VAT is equal to, you take the output minus the input. So you need to get the output minus the input. Remember this side, this credit side is our output, and this debit side is our input. So in fact, we need to get a double line so that we need to know that there's a difference between the debit side and the credit side. So let me have a double line here so that we know there is this double line separates the debit and the credit. Just undo it. So if we begin with this mobile phone, remember the mobile phone amount was 600,000. So if you take 600,000 times 16%, you will get 96,000. And then there was a credit note issued on the sales that we have sold to early traders. And remember the amount was 100,000. So if you take 16% of 100, the amount is 16,000. So you need to less that, because remember we said credit note issued. This is goods that have been returned, and then you are decreasing the amount, the tax invoice. Remember our tax invoice was 300, but we want to reduce it. So you need to subtract that. Sales to Uganda is zero rated, so we don't have any amount here. Then the sales to local market, the amount for sales to local market was 300,000. Remember, I've given you the two options of converting this to 300, we convert to gross, then we take 16%, we get 41,379. On the debit side, we have the purchase 16%. The first purchase, the amount was 150,000. So 16% of 150, we get 24,000. Electricity, the amount was how much? Electricity, the amount was 70,000. So 16% of that is 11,200. X is exempt. We don't have VAT on. It's not vatable. It is exempt. Then rent. The VAT is still 16%. So this rent, the VAT is 16%. And if we take 16%, the rent amount was 60,000. So if we take 60% of 16,000, it's 9,600. Yeah, purchase from local market. The amount was how much? Purchase from 80,000. So if you take 16% of 80,000, you will get 12,800. Now, we find out the credit side is more than the debit side. The total on the credit is 121, and this side is less. So it means our sales is our output is greater than input. This question means that uh, our output is greater or higher. Our output is higher than input. That means we need to pay VAT, of which VAT payable is 63,779. I hope you enjoyed the class. I'll see you to the next class, whereby we are going to introduce now what we call deductible. We are going to introduce what we call a deductible input tax, whereby we have to get common input. Remember, we have three. We need to get the total sales and the taxable sales. Remember, we said total sales, it can include the VAT, the exempt sales, the zero rated sales, and the normal sales of 16%. So we are going to see that in our next video on VAT. Thank you for watching, and kindly click on the notification bell so that whenever I post a video, you are not going to miss it, and share with others so that they can also benefit it. Thank you.